Are you looking for ways to grow your investment portfolio quickly but safely? Do you want to learn the secrets of compounding that can turn small investments into significant wealth over time? In today's video, we're diving into the 6 fastest ways to compound your portfolio. If you've been finding it hard to make your money work for you, this video is for you. We're going to break down the strategies used by savvy investors to achieve exponential growth. So stay tuned because these tips could be game changers for your financial future. Understanding compounding. Before we dive into the strategies, let's get a clear understanding of what compounding is. Compounding is when the returns you earn on an investment generate their own returns. It's like a snowball effect. As your investments grow, they gain more momentum, leading to even greater growth over time. The essence of compounding is time. The sooner you start, the more pronounced its effects will be. Albert Einstein once called compounding the 8th wonder of the world, and for good reason. It's a powerful force that can turn modest sums into substantial wealth with consistency and time. 1. Reinvesting dividends. The first strategy to fast-track your portfolio's growth is reinvesting dividends. When you own dividend-paying stocks, you have the option to take dividends as cash or reinvest them back into more shares of the stock. Reinvesting dividends allows you to buy additional shares without using extra money from your pocket. Here's how it works. When you reinvest your dividends, those dividends purchase more shares, which then generate more dividends, which in turn buy more shares. Over time, this cycle accelerates the growth of your portfolio. For example, imagine you own shares in a company that pays a 5% dividend. Instead of taking that dividend as cash, you reinvest it. Now, your next dividend payment is calculated not just on your initial shares, but also on the additional shares purchased with the first dividend. This compounding effect can grow your investment significantly over time. Make sure to set up your brokerage account to reinvest dividends automatically. This way, you're constantly adding to your investment portfolio without needing to remember to do it manually. 2. Utilizing dollar cost averaging. The second strategy is dollar cost averaging. This approach involves investing a fixed amount of money at regular intervals, regardless of the market conditions. By doing this, you buy more shares when prices are low and fewer when prices are high, leading to a lower average cost per share over time. Dollar cost averaging is beneficial because it removes the emotional aspect of investing. Instead of trying to time the market, which can be stressful and often unsuccessful, you're steadily building your portfolio with consistent investments. For instance, let's say you decide to invest $500 every month into an index fund. Over time, some months the market will be high, and some months it will be low, but you continue to invest your $500 regardless. This method ensures that you're buying shares at various prices and averaging out the cost. The key to dollar cost averaging is consistency. Automate your investments so that the same amount is invested every month without fail. This disciplined approach takes advantage of market fluctuations and compounds your portfolio over time. 3. Leveraging tax-advantaged accounts. The third strategy is to take full advantage of tax-advantaged accounts, such as IRAs, individual retirement accounts, and 401(k) cases. These accounts offer significant tax benefits that can greatly enhance your ability to compound wealth. With a traditional IRA or 401(k), contributions are typically tax-deductible and the investments grow tax-deferred. This means you don't pay taxes on the investment gains until you withdraw the money in retirement. The ability to grow your investments without the drag of taxes can significantly accelerate compounding. There's also the Roth IRA, where contributions are made with after-tax dollars, but the withdrawals in retirement are tax-free. This means that all the growth in your Roth IRA can be withdrawn without any tax liability, which can be incredibly beneficial for compounding over the long term. Consider maxing out these accounts each year to take full advantage of the tax benefits. For 2023, the contribution limit for 401(k) plans is $22,500, and for IRAs, it's $6,500. If you're over 50, you can make additional catch-up contributions. Additionally, if your employer offers a matching contribution to your 401k, make sure to contribute enough to get the full match. This is essentially free money that can boost your compounding efforts. 4. Automated investing and rebalancing. Another important tactic is to automate your investing and rebalancing. Automation ensures that you're investing regularly, as discussed with dollar cost averaging, but it also ensures that your portfolio stays in alignment with your goals. Automated investing platforms, often called robo-advisors, can help you set a strategy and stick to it. They automatically allocate your funds according to your risk tolerance and investment goals, and they rebalance your portfolio periodically to maintain your desired asset allocation. Rebalancing is crucial because it ensures that your portfolio doesn't become overly concentrated in one asset class. For example, if stocks perform very well and bonds lag behind, your portfolio could become too stock-heavy, increasing your risk. Regular rebalancing sells a portion of the overperforming assets and buys more of the underperforming ones, keeping your risk in check while capitalizing on growth. Using automation and rebalancing can take the guesswork and emotional stress out of managing your portfolio, allowing the magic of compounding to work more efficiently. 5. Investing in growth stocks and ETFs. Investing in growth stocks and ETFs, exchange-traded funds, is another way to potentially multiply your portfolio. Growth stocks are companies expected to grow at an above-average rate compared to others. These companies reinvest their earnings back into the business, which can fuel further growth and, consequently, higher stock prices. ETFs are funds that hold a basket of stocks and usually track an index. They offer diversification, which can reduce risk while providing exposure to growth sectors. It's important to research and identify high-quality growth stocks. Look for companies with strong earnings growth, solid financials, and a competitive edge. Similarly, choose ETFs that focus on growth sectors like technology or emerging markets. However, keep in mind that growth stocks can be more volatile than value stocks. It's important to balance your portfolio according to your risk tolerance and investment horizon. 6. Staying informed and continuing education. Lastly, staying informed and continuing your education is essential for compounding your portfolio. The financial markets are always changing, and staying knowledgeable will help you make informed decisions. Read investment books and consider taking courses on investing and financial planning. Joining investment clubs or online communities can also provide valuable insights and support from fellow investors. Knowledge is power, and the more you understand about investing and the markets, the better you can take advantage of opportunities to grow your portfolio. The bottom line: compounding your portfolio is a powerful way to grow your wealth over time. By reinvesting dividends, utilizing dollar cost averaging, leveraging tax-advantaged accounts, automating your investments, exploring growth stocks and ETFs, and continuing your education, you can set your portfolio on a path to exponential growth. Remember, the key to successful compounding is consistency and time. The sooner you start implementing these strategies, the more time your investments have to grow. Make sure to monitor your progress and adjust your strategies as needed to stay aligned with your financial goals. Thank you for watching. If you found this video helpful, don't forget to like, share, and subscribe to our channel. Hit the bell icon so you never miss an update.